We can start.
Yeah. Good evening, friends. I am CA K Balasubramanian, Chairman of GST and Indirect Tax Committee of SIRC of ICAI. I welcome you all for the webinar on the topic GST Input Tax Credit, Recent Amendments and Implications by CA K Balasubramanian, sir. I would like to introduce CA Balasubramanian, sir. He born in the year 1962 and completed his education of BSc and FCA. After that, he started his career in 1989 to 1998 in practice as a chartered accountant. And from November 98 to January 2022, he was employed in public sector undertakings and retired in January 2022 from Bharat Heavy Electricals Limited, Ranipet. After that, post-retirement, his services, he settled in Chennai and doing practice the areas of specialization of customs, central excise, service tax, foreign trade policy, GST since 2017. He brought out a service tax manual for BHEL during 2008 and contributed as special invitee to Indirect Taxes Committee of ICAI, New Delhi during 2011-12 and 12-13. He represented tax issues before authorities, conducted knowledge sessions on indirect taxes. With this brief, I introduce CA Balasubramanian sir to the members. I request Balasubramanian sir to go ahead with his topic. Thank you, sir. Thank you very much.
Thank you. Thank you very much, Mrs. Barrow. I really thank you for a very nice introduction. At the outset, I welcome all the participants for this session. And I thank the team SIRC for giving me this opportunity to. So with your thing, I'm just going to main presentation. Just I would like to give you a brief introduction about the thing. Basically, this ITC concept, it is a very strong pillar of GST because what happens, suppose a manufacturer, he manufactures a product and his cost comes to be 80 and he's selling to the wholesale distributor 100 and he again goes to the retail distributor 130 and ultimately it comes to the retailer shop at 150. If the tax is not on value addition, then unnecessarily the government will be getting huge money and ultimately it will affect the ultimate consumer. So the concept is, it is very good. While introducing, it was told by the government that it is a good and simple tax as well as it is seamless flow of credit. Undoubtedly, it is a good tax. There is absolutely no issue because it has subsumed so many taxes like excise, service tax, state VAT, central sales tax, etc., etc. And a lot of problems have been solved like collection of declaration forms, simultaneously charging VAT as well as service tax on this information technology services and all those things have gone. So undoubtedly, it is a good tax. So far as the seamless flow is concerned, presently there are some issues. I think in the long run, once that the GST council is set up and all, this also will go. Now, let us mainly concentrate on the recent developments. See, there are so many positive things that are happening. Now, this is most crucial because of the amendment in the Act. The Act provides that in case the supplier has not paid the applicable taxes to the government, then we have to reverse the credit, and as and when the supplier makes the payment, we can re-avail the credit. This is the provision which is introduced recently from 1st October 2022. Now what happens? These relevant rules are recommended for approval. This is one of the measures. And if you see for economy, from 1st April 2023, it is mandatory to blend minimum quantity of ethanol with petrol. So they have uniformly made the rate for all refineries at 5% so that they are encouraged to use that minimum stipulated thing. Earlier, there was confusion from July 22 on residential house taken by a person who is already registered under the GST, that he is also liable to pay the GST. Now, clarity is that when there is, it is used exclusively for personal use, there is no such requirement. Similarly, the prosecution limit was earlier 1 crore. It is a too small limit considering the economy of our country. Considering the issues, they have increased to 2 crores, except in case of fake invoice. And similarly, if a person registers with the builder for purchase of a apartment or building, and in the course before completion, he decides to withdraw the or cancels the contract, then the customer is an unregistered person. Now the provision is made for refund, seeking refund by the unregistered person as well. So like that, the government is taking a lot of initiatives for trade facilitation. There is no doubt on it. They have given a clarification that if the payment is not made within 180 days to the supplier, then we have to reverse the credit. Actually, earlier there was no clarity, but still the common understanding was that we have to reverse only to the extent of unpaid amount. Suppose we buy a product for 1 lakh rupees and we have already paid 60,000 rupees. Now on 180th day, we are not in a position to make the payment of 40,000 rupees means, so whatever is the credit on that, 40% is to be reversed. The clarity was not there, now that clarity has come. Similarly, day by day, norms are becoming very stringent. GSTR1 can be filed only if and only if it is filed for the previous month. For example, in case you have not filed the GSTR1 for November 22, you are not permitted to file the GSTR1 for December unless and until you first file the November. Similarly, GSTR3B also, there are restrictions. You will be able to file the GSTR1 if and only if you file the GSTR3B. Like that, these restrictions are brought. Now they are bringing a facility to intimate to the assessee the differences, if any, from the system itself, so that once the assessee comes to know, he can ascertain if the difference is due to short payment, he can make the payment, or if it is a mistake, he can explain the difference. And accordingly, once it is gone, then without any interference and without seeking the authorities, automatically it will be GSTR1 will be filed next time. Like that, these are all good measures. And there are very good opportunities. I think there are so many number of participants, many of them may be practicing in GST as well. Now, recently, Commissioner Audit, Central Board of Indirect Taxes and Customs has sought an expression of interest for appointing special auditors for special audit under GST Act 2017. It is open till next month, 4th or 5th. So people interested, they can go to this website and apply for that accordingly. Similarly, starting from the year 2017 till recently, approximately, this is only a news item, some 50,000 show cause notices have been issued based on the audit observations. So these are all opportunities for chartered accountants who are looking for good practice in GST. Similarly, there was a provision that there is a time limit for availing the input tax credit. Now, it is sometimes we issue a debit note subsequent period based on the earlier invoice. Now, what happens? Suppose March 22, we have raised the original invoice, and there is a price variance clause, and accordingly there is some 20% increase in price. And probably in May 22, if you issue a debit note, now for taking credit, the date of debit note will be considered. So your time limit goes up to November 23, not November 22. So those facilities they have given now. Whenever there is some delay in raising the PVC and all, your input credit will not be affected to that extent. This provision will be helping. Similarly, in case of e-invoices, e-way bills, there is absolutely no need to carry the physical copy. Just QR code with invoice reference number is sufficient. if any authorities check during the transit. So as I told you earlier, it is really a good tax. There is no doubt, but simplicity has to come. It has to evolve. It is taking so many amendments, and the way in which things are moving forward, I think some more simplicity may come because the government wants to reduce the litigation as well as make law transparent. ITC seamless, I think once we discuss, I leave it to the participants. See, there are so many good initiatives taken by the government, which is very much beneficial to the trade and industry. The purpose of this session will be fulfilled even if this one particular aspect is understood clearly by each and every participant. See, the Act simply says that starting from 1st July 2017 itself, if there is any wrong availment of input tax credit, interest is attracted if and only if the same is utilized. Suppose if there is wrong availment, it is reversed before utilization, then absolutely there is no need for payment of any interest. That is first part. Second part, even if wrongly availed credit is utilized, the interest is payable only for the period during which it is utilized, as well as only for the quantum for which it is utilized. These things are very clearly brought out in section 86, rule 86B of the CGST Act, which we can easily refer. Actually, this is very, very interesting as well as very, very important. So I would like to go a little further on this aspect. Starting from 10th September 2004, there was a provision. It was Inward Credit Rules to Rule 14, which simply provided that if credit is wrongly availed or utilized, interest is payable at the rate of 18%. This provision was creating lot of problem. Many people, without any fraudulent intention, due to inadvertent error, by mistake they have availed some credit, which on being pointed out, they are very much willing to reverse as well as they have not utilized. Those cases are many. Under these circumstances, what happened? There was a fraudulent person. That person is based in Punjab and Haryana by name InSwift Laboratories. Now, during the period 2001 to 2006, this fellow was claiming input tax credit based on bogus invoices. Bogus invoices means there will be only invoices based on the document he will avail the credit. There is no physical movement of goods at all. Like that, he has accumulated huge credit balance and sought refund from the department as well. The department become cautious when how it is possible to have such a huge credit if it is inverted root literature, it is not applicable in their case. And what is their operation? They are simply manufacturing and selling at a profit margin. That being the case, there is absolutely no need for this kind of refund. So they investigated the issue somewhere in 2006. They found that these are all bogus bills. Immediately, they raised a huge demand in crores to pay the applicable amount to reversal as well as applicable interest. The assessee preferred to go to settlement commission. He went to the settlement commission. The settlement concluded that whatever is the wrongly availed input credit, that is fully reversed. To be reversed, it is to, if it is already claimed refund, it is to be paid to the government. And during that regime, that was the excise regime, the maximum interest that could be charged, it was not even 24%. Presently, maximum amount is 24%. Now, government has capped at 18%. We'll cover separately. Despite the maximum interest being 36% at that point of time, settlement commission was very liberal and permitted institute laboratories to make the payment of interest at the rate of 10% simple interest. But what happened? They did not pay the applicable interest. They preferred an appeal before the Punjab and Haryana High Court. Based on whatever arguments they put forth and other things, the Punjab and Haryana High Court simply said, yes, there is no need for payment of interest when it is not utilized. Only to the extent of utilization, they have to make the interest payment. Like that, they gave an order in favor of the assessee. Department was in appeal before this. This happened somewhere in February 2011, I think. Now, what exactly has happened? Supreme Court has gone in depth and they concluded that when credit is fraudulently availed and it is used as well, and the law says credit wrongly availed and utilized, based on that, they concluded that full interest is payable and accordingly order was passed. Now, the department became too smart. Within days, they have issued a centralized circular to the effect that whatever stand they have taken, that interest is payable even if it is simply availed and not utilized. That stand is correct, which is endorsed by the Supreme Court. Like that, it was giving a lot of trouble to the genuine assessors. Under these circumstances, this issue was referred to the Indirect Taxes Committee of the CA Institute during the budget submission 2012. The matter was discussed thrice in the CA Institute premises, and it was represented by the chairman of the Indirect Tax Committee to the member budget in the North Block CBIC and the revenues for CBEC. At the time, Institute gave 3 justifications for this claim. Why interest is not payable when it is not utilized. First argument was that it is only compensatory in nature. If I have wrongly availed, but without utilizing, I am reversing, then government is not at a loss. I have to compensate you when, because of me, you incur loss. That was the first concept. Second concept, department is of the view that based on the institute laboratories case, interest is payable even if it is availed and not utilized. Whereas the same Supreme Court in a different case, that is Chandrapur Magnet Wires, held that in case any credit, if wrongly availed, and it is reversed automatically, reversed voluntarily before utilization, then it is as good as non-availment. Third point was, what is the distinction between a fraudulent person and a genuine person? You should punish only the fraudulent person who is availing it wrongly, availing it with malafide intention. Not every assessee who is making a genuine mistake and reverse the interest should be applicable only to the extent. Somehow this was accepted by the government in 2012 and they amended the Sembad credit rules with effect from 1st April 2012 to the effect that interest is payable if the credit is availed and utilized. Earlier it was or utilized. That simply replaced the or with and. That was highly beneficial to the assessee. So this was the background. This was the history. That is applicable for the period from 10th September 2004 up to 30th June 2017. As you are all kindly aware, from 1st July 2017, GST was in force. Now, again, the same provision was there. Section 50 deals with the interest, and there is a provision which said that if it is availed or utilized. Now, industries have raised their hands, and based on that, government has come forward in July 2022 to make it replace the word and with or with the and. Accordingly, and the beauty of the case is that they have amended the section with retrospective effect from 1st July 2017 itself. So it is highly beneficial to all the assessees, any wrongly availed credit, interest is attracted only when it is utilized. If it is not at all utilized, there is absolutely no need for interest. Now again, they have given the provisions in the rule in such a way that interest is attracted only for the period during which it is utilized, and the interest is payable only to the extent you have utilized. This we can make by simple example. Suppose the total credit available is 10 lakhs rupees during the end of the particular month, and 8 lakhs rupees is genuine credit which is legally available, and only 2 lakhs rupees I have inadvertently availed. Now there are three situations. If throughout the period the amount is minimum 2 lakhs or more, it means I have not at all utilized the wrongly availed credit, so no interest is payable. Suppose out of the 2 lakh I have utilized only 50,000 rupees, and throughout the period there is a minimum of 1,50,000 rupees. Then you need not pay the interest on that amount which is outstanding, lying in your credit balance, electronic credit ledger throughout the period minimum. Only on the 50,000 which is actually utilized, on that you have to make the payment of interest. I think this aspect is clear to everyone attending. So this is very, very beneficial to all the assessees and the Act provides for maximum interest rate of 24%. And earlier there was a situation where when it is voluntary, when it is normal course, it is 18%. If it is based on 73, 74 and all, like notices and other things, under the intervention of the department, it can go up to 24%. Now government clarified that it will remain 18% only, but still cushion is there for the government. As and when they wish to increase the limit, they can increase to 24%. This is the case which I was referring in the immediate past discussion. Based on that Supreme Court judgment, immediately CBC gave a circular that interest is payable, but ultimately the situation was reversed in 1st April 2012. So these are all the arguments that we have put before the budget committee, and accordingly the law was amended, the initiative of the ICAI. After this amendment, Madras High Court has held that this amendment is only clarificatory in nature, and hence it will it will have effect for the entire period. So any person who is having any issue on interest for the period, whatever may be, even from the old regime as well as under new regime, we can conclude that interest is payable only when the credit is utilized. That is our conclusion. So I have already told that maximum interest is capped at 18% present. This law amendment is with effect from 1/7/2017 to help all the industries. Similarly, there are some positive developments in the recent. Earlier, exporters, they are getting some duty credit scrips. If they sell it in the market, then on the turnover they got reverse input price. That is clarified now. There is no such need. This is only clarificatory in nature. Whenever there is some proceedings initiated either under section 73 or 74, which will deal separately, we cannot use the electronic credit balance. Now the situation is that whatever balance lying in the electronic credit ledger, it can be used for payment of output tax liability in the normal course as well as this thing. That the only restriction is it cannot be used for payment of interest, penalty and all. For making payment of interest, penalty, we have to essentially go through the electronic cash ledger route only. Similarly, one more development earlier that e-way bill, either recipient or supplier, if anyone is under fault, it will be blocked. Now they said if the recipient is fault, it will not be blocked for the supplier. That's also one good development. Now, regarding the flow of credit, there are three sections which are most crucial, most important. One is 219, that is definition of capital goods. Another is 259, which is definition of input. Another is 260, which is definition of input services, which we will see. These things are very, very broad, as well as there are absolutely no issues except for small segment, which we can see by way of example in the course of presentation. Everywhere, everything is available. So it should result in seamless product flow only. But of late, what is happening? It is very, very unfortunate that so far they have not set up the GST appellate tribunal. Even in the 48th meeting, it was expected that they will discuss the issue, but unfortunately, due to shortage of time, this issue was postponed, and news are coming that in February 2023, this next council meeting is likely to take place, and this issue is likely to be resolved. And there are plans in the government's mind to set up one tribunal at each and every state headquarters, and head office of the GST appellate tribunal will be lying at Delhi. This is the proposal. Now, because this thing is not happening, these field formations, they are creating a lot of troubles to the common people. And since the remedy of approaching the tribunal is not there, many assessees are put to a lot of hardship. People who are already in GST practice are well aware of this development. Now, in these cases, I just came across during last few days, then only for academic interest, I am bringing to the notice. In the case of Sunil Kumar, which was a Union of India others, there was a delay of just 1 day. And that appeal was pertaining to revocation of registration because registration was cancelled based on the order of the adjudicating authority. The delay of technical delay of 1 day was rejected by the final authority on the ground that revocation was not sought in time. I could observe that this hyper-technical as well as pedantic approach and settled the order cancelling the registration. This happened only on 13th December 2022. Similarly, just I am giving 1 or 2 examples, that's all. See, actually, the only remedy available when a person is very seriously affected is writ before the jurisdictional high court. What is writ? It is a right given to all the persons under the Article 226. If alternate remedy is very difficult, then only we should seek this. And many writs are being rejected at the admission stage itself or at the trial based on the reason that alternate remedy is still available. So you only when you have very strong case like the one I quoted, and I'm going to quote 2 more in the next slides, we can get some success in the writ at the High Court. So if there is either breach of fundamental right or violation of principles of natural justice or excess jurisdiction, in those cases, there is good chance for getting success in the writ. Actually, I am happy to see that there are more than 200 participants, but only thing is, in order to have continuous flow, I want to complete the presentation around 6:40, 6:45, so that if any questions are there, we can always discuss that before we conclude. Similarly, this is very, very interesting. Actually, there was a trader by name Ganapati Patrice. This fellow was transporting old batteries in a truck. E-way bill was generated. All the descriptions are there. It is old used battery, small size, old used battery, big size, value of the battery, where is the origin, where is the destination, what is the route, vehicle number. All the informations are accurately coming. There is absolutely no issue. there was only one issue that the quantity was mentioned in number of pieces. It was their practice and it is being sold in number of pieces only. And there is no requirement as per the relevant rules to show it kg as well. But despite all those things, the vehicle was detained by the intercepting authorities. And they said, you have wrongly mentioned the quantity in pieces. It is not permissible. You should have mentioned in kg. Because of that reason, we are retaining the vehicle. Left with no option, SSC approached the High Court. Allahabad High Court has given a favorable decision in favor of the SSC. Similarly, there is just one more case. In the case of SP Traders versus Superintendent, there was no valid reasons in the show cause notice. They have simply given a show cause notice, and SSC has given the reply. Even without taking much time, the next day, a reply was filed in 10th January, means 11th January, they have passed the order, passing that this thing, registration itself. Now, when approached, what is the reason? They are saying that it is an instruction from the head office. So, the principles of natural justice should be given, SSC should be heard, and reasons, it should be speaking order, it should not be simply one line order that as a cancelled order. This is what High Court has observed. Now, since these kind of developments are happening, there is absolutely need for tribunal so that SSCs are not affected. Now we are going to the main. How these developments are taking place, that let us have a quick look. Now, how the collections are there, how the amendments are there, how EV bills and EV things are there, that we will discuss one by one. See, it was introduced in 2017 July, so that 2018 it was only for 9 months. 2019, okay, considering that there is some jump. This 2020 as well as 2021, the country was very severely affected due to COVID, and country came to a standstill. Operations of movement of vehicles and everything is banned, and despite all those things, at least collections were retained. Let us see the figures for 2022 as well as 2023 only. There is a very good jump. That originally monthly GST collection, when it was reaching 1 lakh crore, it was spoke as it is a good achievement. It is industry is reviving, country's economy is improving, like that. That it has already gone to 1,23,000 by March 2022. In the recent months, if you see October, November, and all, it's having somewhere around 1,45,000 rupees. So the collections are improving. So far, the e-invoicing requirements are concerned. What the government is doing, it was introduced for the first time only 2 years back, somewhere in October 2020. At the time, the limit was 500 crores. Now, within 3 months, it was reduced to 100 crores. Now, from April 21, it was made 50 crores. From April 22, it's made already 20 crores. Now, from October 22 onwards, is operational 10 crores. Now, there is a move, but till date, there is no such notifications or something, that it will be further reduced to 5 crores. Why I am discussing this? Because how the government is approaching now, if e-invoicing mandatory, then everything will come automatically in GSTR1, GSTR2 and all. There is no need for SSC to do any work. That way it is beneficial to the SSC. But the problem is, a person who is having a turnover of 100 crores and above, he will have all the infrastructures like technical support, IT support, necessary systems, all those things. But if it is reduced to 5 crores, then small persons who may not be having sufficient facilities will have some problems. Now, all the SSCs, we are facing a lot of challenges in GST. There is a very big challenge for the government as well. The government, how it is seeing the collections on a monthly basis. Even though it is improving, they are not fully satisfied because of the just increase in the numbers. What is in their mind, it is what is the GDP of the country, what is the percentage of GDP on which is coming as GST collection, then it is a low figure only. Somehow they wanted to increase the collection. Actually, it is a very sensitive issue. If the rate increase, it will definitely adversely affect the inflation, but it is the responsibility of the government to keep the inflation under control. That is why they are making very safe steps. Just recently, during the 47th council only, they have decided to make certain things. I am just briefly touching upon few things just to show how aggressive the government is in tax collection. One is hotel accommodation. Previously, up to 1,000 rupees, there was no tax per day per room. Now they say there are two rates applicable. If it is up to 1,000 rupees, it is 4%. If it is more than 1,000 rupees, 18%. Like that, they have amended the law. Similarly, so far as the food grains and other floor items are concerned, earlier it was attracting GST only when it is branded. Brand means it is under copyright and all, it is registered like that. Only very few things are come. Now they have amended the law in such a way that it is packaged and labeled. Suppose there is a retail store and he is putting a label showing his shop name as well as description of the goods and all, and date of manufacture, date of expiry and all. Then also it is packaged and label only. For few items they have increased the rate, and for few items they have levied the tax for the first time. That way, government is eyeing a huge tax collection. That's where it's going. Actually, government also wants to reduce the litigation. That is why some good amendments are happening. But this we have already crossed 5 years. We only hope that it will happen very soon. It is not happening because though the top officials at the very senior level at the CBIC and all are very interested in making the law simple and reduce the litigation, and because of the revenue targets, that field formations, their mindset is not in favor, and their main priority is something. That's why this is not happening. Now, let us go to the main topic. Basically, there are three sections which are very, very vital for input tax credit. That is 219, definition of capital good, 259, definition of input, and 260, definition of input service. Capital goods means any goods which is calculated in the books of the person availing the credit, which is used or intended to be used in the course or in furtherance of business of the assets. See, it is a very beautiful definition. It is very elaborate definition, and they are using the terms only are. It is not under which is going to restrict. It is not necessary it should be used in business. Even it is used in further business, then also it is eligible. It is not necessary that it should be actually used, even if it is intended to be used, then also eligible. So all the conditions, anyone is satisfied, you are entitled to take the credit. Now, since the introduction of GST, there is very, very minimum restrictions on capital goods. For example, if a pipeline is laid outside the factory, then there is a specific rule that it is not available. So that is not available. Similarly, if you are a telephone service provider and construct a telephone tower, that also treated as single property and no credit is available. Other than that, most of the things are available. Let us take some practical examples. Suppose you buy some computers for your office, or you buy anything for your requirements, official requirements, which is not for personal use, it is fully for official use. The only requirement is that you should buy it from a registered dealer and you should take an invoice on B2B. Because if the supplier sells the same as B2C, then ultimately it will not go to the output supplies in GST, it will get auto-populated in 2B. That kind of problems are there. But when you specifically tell the supplier that it is for business purpose and he also agrees and issues the invoice on B2B basis, then there is no issue on that. Similarly, input, it is a very simple definition. anything which is other than capital goods, which is used or intended to be used in the course or furtherance of business. Now we can think of one or two minor examples which may not be inputs. For example, there are certain items which are specifically restricted, like if you gift something, so it is not used in the business, that is only for this thing. Those kind of things only will be restricted. So input service also similarly, it's a simple definition, used or intended to be used in the course or in furtherance of business. So far the definitions are concerned, there is no restrictions. These are all very simple and it is assessee friendly only. Now, next major important provision is section 16.2. Section 16.2, there are simply 4 conditions starting from 1st April 2017 up to December 2020. There are only 4 simple conditions. In December 2021, there are only 4 simple conditions. One is you should be in possession of the invoice. Second, you should be in receipt of the material or service, whatever it is, you should be in receipt. Third requirement is that the supplier must have paid the applicable taxes to the government. That requirement was already there. It is already there. Now they are making more stringent, that we will discuss in today's presentation. That requirement is not a new one, it is already there. Fourth requirement was that the recipient must have filed all the returns. Whatever return you have to file, that you should file the return. Then if all these conditions are simultaneous, see, there is a difference between fulfillment simultaneously and cumulatively. See, things may happen during different period. You may get the invoice, but goods may take 5 days, 10 days to reach. Invoice may be dated 31st of the month and it may come next month. Those kind of issues are there. But you are entitled to take the credit as and when you get the credit, and as when the other conditions are satisfied. All the conditions should be satisfied. That is the only requirement. It's not required that it should happen at the same time. It will not happen. Now, from 1st April 2022, they brought one minor amendment which says that it should be reflected in the return. Whatever output supplier, that it will reflect, then only you are eligible like that. Now, from 1/10/2022, another restriction is brought that we will see. Now, we will discuss what are the cautions we have to avail and how it is important to avail the credit optimally. See, what is optimum availment? If a credit is legally available and all requirements are fulfilled, you inadvertently omit to avail the credit, then it is a business loss. See, in today's situation, when the tax rates are almost 18%, and if it is dated at a later stage, then interest is also 18%. So one cannot afford to lose the credit. See, actually, absolutely, there is no distinction between the amount lying in electronic credit ledger and amount lying in your current account in the bank. Why I am referring current account? Because you will not get any interest. Now, as and when you are liable to make the output tax liability, it is not in your hand. It is as per law. You are making the payment within the time. Otherwise, if you don't make the payment in time, then you have to make 18% interest. So, because of the restriction, you are making the payment in time. Now, if there is any omission, it is a cash loss. It is a business loss. So, we should be doubly cautious. But what cautions we can take? It is very almost, because many things are dependent on the supplier. The supplier might have correctly put all the details in his outward supply. Then only it will be reflected in our, presently it is GST R2B. Then only you will be able to file your GST R3 based on that input. Now, situation 2 is also very bad actually. Suppose by oversight or by mistake, you avail the credit wrongly, then first and foremost, it has to be reversed. Second, in case it is utilized, then for the period when it is used, it attracts 18% interest also. So, we have to be very careful while availing the input tax credit and check at every stage that whether we are availing correctly. See, there are only 3 things. One is the definition of input service, input as well as capital goods payable, already covered. Second thing is that section 6.2, that conditions, that whether those conditions are fulfilled, that we have to see. Second thing is that 17.5, it is a big block credit. There is a big list that the course of presentation, we will discuss. Accordingly, we will move forward. So we have to ensure that both the things are not happening. A legitimately available credit is not omitted to be availed, and a credit which is not eligible otherwise. Actually, whenever credit is available and there is no issues, we should be highly conservative. Whenever there is some problem, then we should not be so aggressive. Should be earlier we should be aggressive, but whenever there is some doubt, then we should be very, very conservative, because if it is not that easy to prove, because at the initial stages at the adjudicating authorities level, they will take a stand that it is not available only. Ultimately, legal recourse will get only at tribunal level or high court level. It's very difficult for small assessors cannot approach the high court. These are all the important provisions governing the ITC. This is section 1, which is talking about entitlement. These are all the original 4 restrictions which were earlier there. There are some restrictions that in case we have claimed depreciation and capital asset, then that same thing you cannot avail credit. So it makes sense to not this thing capitalize and capitalize only the cost, and whatever GST that is taken to credit ledger, that will be more beneficial because it can be used immediately. And there is a time limit for availing the credit. That is earlier it was the due date for filing return of September, it was 20th October. Now it is extended to 30th day of November. It's a very good move. This is not affecting the assay in a big way, because this amendment is from 1/1/2022. Details of invoices debit note referred to in class A has been furnished by the supplier in the statement outward supplies, and such details have been communicated to the recipient of such invoice or debit notes in the manner specified under Rule 37. So here what precautions we can take? We should always go to a good supplier. We have to ensure that the supplier, we can only cross check whether he is making favor to the government. What we can check is whether he is making all the entries correctly, so that we are getting our due credits. This is only for our understanding. Suppose credit is reflected in 2022, but goods are received in January only, then you will not be in a position to avail credit for December, because the second condition is not fulfilled. Similarly, even if all other conditions are fulfilled, credit is not reflected, then also you can sometimes avail the credit. For example, if you are importing goods or if it is RCM, then it will not be outward supply for the supplier. Ultimately, it will not be reflected, but still you are eligible to take the credit. There is one more situation: credit not reflected, but other conditions are fulfilled. Credit is available. This is possible if any error in the part of the supplier. Suppose either GST number or B2B is mentioned as it is, etc. There could be some problems in not coming, but ultimately at the end, once it is rectified, you will be in a position to get. This is the most crucial amendment. See, the thing is, why these kind of amendments are coming, I really don't know, because there is already a provision, but still they are saying, this is to curb that issues. I think we will go one by one. This, fortunately, till today, nothing is notified, but Act is already amended. 16 is already amended. They have inserted a subclass BA that made operational from 1st October 22 to effect that details of input tax credit in respect of the said supply communicated to such registered person under section 38 has not been restricted. So this is section 16 subsection 2, a new class added with effect from 1st October 2022. To understand the implications of this amendment, we should go to section 38. Section 38, it says that your credit will be divided into two portions. One is eligible portion, another is non-eligible portion. Eligible portion, there is no issue, you can avail the credit. Why that second portion comes, that this is what that section 38 provides. See, actually, these are all very stringent amendments which are in the pipeline, and these rules may be notified anytime. So we should be fully geared up to meet the situation. This session is only to create some awareness that these things are in the pipeline. See, there are some fraudulent persons who simply take registration only for the purpose of passing on the credit, and they simply pass on the credit to the buyers and they vanish and they simply surrender the registration. If the person surrenders and he vanishes, then it becomes very difficult for the department to catch him. That is why they are planning that there could be some restrictions for availing the credit from the persons who are registered under GST as a new registration. That restrictions are not yet introduced, but as it will come. Similarly, if the supplier is defaulting payment of GST, if the supplier defaults the payment of GST, see, this is very, very highly stringent position, I would say, because what, as a buyer, what I can do, I can only ensure that I make the applicable payment to him as per the contractual terms. It is the responsibility of the supplier to make the payment to the government, and it is not in my control as to whether he has paid or not. But day by day, they are improving the system, and it will be reflected in our GST portal. And after verifying, we can take a stand that if it is paid, then okay, we are safe. And if it is not paid, then we should not take that portion because it is restricted. And the rule says it should not be a restricted one. Third condition is tax amount exceeds in GST R1. Because if the actual tax payable is 1 lakh, by mistake, if he is entering in GR 210 lakhs, then ultimately when the payment takes place, he will make the payment only on 1 lakh rupees. Those cases, these kind of issues will come. Then section 75(12) explanation says that you should not use more than 99%. If it is used, then also it is not permitted. Section 49(12), there is restriction on use of electronic credit ledger for specified persons. Actually, they are covering many things, and they put a very safety class that other class of persons as may be specified. So this is only to create some awareness, and as and when these rules are notified, then we have to go in depth. Now there is another change which is also very important to note. That is section 37, subsection 4, inserted with effect from 1st October 2022. This is very, very important recommend. Now it is only a procedural thing. So we should be very periodical and continuously keep on filing the returns to avoid this situation. See, this section 41 of the CGST Act, it is completely new from 1st October 2022. Old student. I think we have to spend a lot of time on this because it's very, very stringent one. Every registered person shall, subject to such conditions and restrictions as may be prescribed, be entitled to avail the credit of eligible input tax credit as self-assessed in his return, and such amount shall be credited to his electronic credit ledger. This is the rule which is already in place. Now, the credit of input tax availed by a registered person under subsection 1 in respect of such supplies of goods or services or both, the tax payable whereon has not been paid by the supplier shall be reversed along with applicable interest by the said person in such manner as may be prescribed. See, this why these kind of rules are coming? How the assessee or the buyer will be in a position to control the seller? These things are questions to be answered. Earlier, there were so many acts like excise, service tax, state VAT, central sales tax, octroi, entry tax, like that. Now, what they have done, they have taken clue from all the respective acts, and wherever it is beneficial to the government, they have brought the provisions. Now, it is having huge implications. You think of a person who is having large scale operation and he is buying from 100 sellers. Now, how I will be able to monitor whether all the persons have paid the applicable taxes, and I have to find out, identify the case where they have not paid, and I have to either not avail, or in case I avail, I have to reverse it along with interest, and I have to wait till such time the supplier makes the payment to the government. Now, there are so many case laws at the High Court level, at Supreme Court level, that this kind of provision cannot be there. It is ultra-wise, it is extra constitutional like that. But those things are applicable only for the respective state VAT Act, because these kind of similar provisions were there in many of the state VAT Act. Then the court were taking a uniform stand that this kind of provision should not be there because I don't have any control over the supplier. Anyway, this is the order of the day. This section has been already introduced, and as and when they make the relevant laws, then we have to comply the law. We don't have any option. See, this is only for academic interest. See how the system works. The system works, first and foremost, any proposal, it has to be through act, means it has to be introduced in the both houses of parliament. Both the houses has to pass the act, and after that it will go to the assent of the president, and once the president gives the assent, it becomes an act. This is what happening in every budget under. And as and when any amendments come, then also the same procedure. It is put before both the houses of parliament, and once it is approved by majority, it goes to the president. But rules, the government is taking powers from the act, and accordingly they give the rules by way of notification. Now, Rule 86B, it was introduced from 1st January 2021 itself to provide that we cannot make payment of output tax liability more than 99% if your turnover is monthly turnover is more than 50 lakhs, like that. But the act is introduced only now, recently in October 20. There were several amendments through the Finance Act 2022. Some of them were made in July, many of them are made in 1st October 2022. So this is one such thing. Act, but so far as government is concerned, it's only for academic interest. So far we are concerned, since rule is in force, it is applicable from 1st January 2021 itself. So this is a requirement. It is only a legal requirement. No input tax credit shall be availed by a registered person in respect of invoices or debit notes, the details of which are required to be furnished under substantial law section 37, unless the details of such invoices or debit notes have been furnished by the supplier, the statement of outward supplies in Form GST-1, or using invoice furnishing facility. So what we can do, we can closely monitor, but it is not that easy. Anyway, there is a requirement which is to be fulfilled, that we have to take care. This input tax credit in respect of such invoices, debit notes have been communicated to the registered person in Form GST 2B. So here for Form 2B, it is auto-populated. So we have to simply see whether it is happening. already this requirement was there. Whether it is goods or service, you have to make the payment to the supplier or product service within 180 days. And if it is not made, you have to reverse the credit along with applicable interest. This provision is already there. They are making only very strong from October 2022 by introducing that it has to form part of the output liability and pay the interest and this thing accordingly. So that this here we have to keep some mechanism. Actually, the cases where the payment terms is more than 180 days, there will be some problem. But if at all you want to avail the credit, then you have to ensure that you make the payment within 180 days so that interest is avoided. Or else, since you have got the time for availing the credit up to the 30th November or due date filing of next year, then at least you should, but then it becomes very difficult to monitor. What are all the invoices on which you have not taken the credit, that is to be closely monitored, because we have already discussed that if credit is eligible, still you don't avail, then it is a very serious loss. So any short payment that will attract interest that can go up to 24%. This I think we have already discussed. This is very, very highly beneficial for the entire industry. So as we discussed, starting from the original period of 2004 till today, we can always take a stand that if any wrongly availed credit is not utilized, then no interest is payable. The government has been so generous to make the amendment with effect from 1st July 2017 itself. However, there is a possibility that field formations may take a stand that law was amended in 2022. Then we have to again support the case that it is a retrospective amendment. What is the need for section 17? Because on the one hand, they have given the definition for capital goods input in input services. We have to ensure that the definition is fulfilled. That is a basic and fundamental condition. Without that, we cannot go to the second step. Second step is contained in section 16.2. We have seen old restrictions as well as new restrictions which are introduced from 2022. Once all those conditions are fulfilled cumulatively, then credit is available. But there is an exhaustive list. It is a very, very exhaustive. I think this section 17 is there are no further developments in the recent past. That's why I'm not touching. But what is the idea of the government? The idea of the government is that it is mostly applicable to services, but it is applicable to goods as well. For example, if you consume some food, then they say it is going for the human personal consumption, so it is not for the purpose of business. Like that, they don't allow the credit. Similarly, motor vehicle, if it is used only when it is in furtherance of the business of the same category, they can allow it. Otherwise, in normal business, it is not allowed. Similarly, medical and all treated as personal consumption. Canteen are also similarly concerned as personal consumption. So if you have some exclusive recreation club within the business premises, then whatever money spent on that GST paid, it will not be available. It is personal consumption. Medical insurance of director, even if you debit the P&L, it will not be considered for credit. If a person is staying in a hotel and whatever tax he paid, there are two situations. The situation is that if it is a personal trip, then you will not be entitled for the credit. If it is for official, if you are making an official purpose, despite the restrictions contained in section 17.5, credit is still available. Only thing is, that stay in the hotel is very, very essential for particular activity. For example, if you have some remote location of operations and some technicians or some technical people are required to go and visit that place, and without that stay, that work will not be completed. Those kind of situations, credit is still available, but still based on the decisions which are coming at the High Court level. This is if it is automatically reflected in the GST 2B, whatever the information like whether he has paid the tax to the government and you are very clear and you avail the credit, then you are safe. And till such time you come to know that it is not reflected in TUB, it is better not to avail and make cash payment. It will have very serious implications. I think it will be appropriate to talk about Bharati Airtel case here. What exactly has happened in July 2017? They had a huge credit and they have made all the legal requirements. July, August, September gone, and they wanted to make the payment during October. At the time, they found that there was no reflection of the available credit amount in the electronic cash ledger as the Form 2, at the rate of Form 2. So they made a very huge payment, not a small amount, some 900 crores, 913 crores. They have made a through electronic cash ledger and made the payment. And subsequently, see, actually the problem came because the government has introduced the tax in a hurried manner without ensuring that all the backups and the background is fully available. So they were not in a position to truly reflect the available credit balances of the assessees in their Form 2. And because of that, this fellow was forced. So ultimately, he approached the High Court and said, please kindly permit me to take refund of this cash and amend my GST with retrospective effect so that I can make use of the credit ledger. So this payment and interest can be avoided. Even if he takes refund, he will get a refund of only 6%. That is another story. If there is any delay from our side, we have to make a payment of 18%. But if we make some inadvertent error or some excess and they give refund, it is only 6%. That is an anomaly that we have to take up suitably with the government. But since the huge amount was paid, he approached the Delhi High Court. Delhi High Court have favorable decision. Yes, it can be amended. But department went to the Supreme Court, and ultimately Supreme Court came with a different view that it is not permissible at this stage because we have several other implications. So all those things are happening because the stringent provisions of the this we have to doubly ensure that we are at least not taking credit on a portion on which the respective supplier has not paid to the tax to the government. I think as and when more guidelines come, as and when the situation improves and systems are properly reflected, we will get little more clarity on this. But if you see the provision, it says interest to be paid by the supplier as well as the recipient. So it will be a double benefit to the government only. See, we are mainly discussing the eligibility of the input tax creditor. How many tests it has to pass, you see. Suppose, okay, an assessee who is having thousands and thousands of crores of turnover, he will have full-fledged system. He will have full-fledged system designer who will be having a programmer. They will be in a position to define everything. But you think of a small person, how difficult it is, how many conditions you have to fulfill to ensure that he is eligible. Just I have tabled. First and foremost, we have to see whether it is used or intended to be used either in the course or in further on the course. Only if the answer is yes, you are permitted to go to the second stage. Otherwise, you are gone. Now, you should be in possession of the tax invoice or debit note, whatever is a required legal document. if you are having only invoice and you don't have supply, then it is a fake invoice. It is a case of bogus, because that is why they put a very stringent condition that it should be receipt of goods or service are both as applicable. The next condition is the taxes has to be applicable paid to the government. This also should be fulfilled positively. Supplier furnish information output supplies correctly as required under section 37, which is correctly reflected in his output. See, what is written? One, there are several columns. What is the description of the goods? What is the item code? What is the value? What is the tax? Who is your buyer? What is the GST number of your buyer? Whether it is a B2B, all those things, everything should be correct. Even if you suppose you mention the GST number wrongly, it will not come to you, it will go to somebody else. Suppose B2B is mentioned as B2C, it means credit is gone. It will you will not get the credit. Those are so many things that test has to be passed. Then it comes to the next stage. It should be in receipt. Then actually payment should be done. Then receipt furnished return under section 39. If it is not filed, then you are not eligible. Then there is another condition that in case the goods are received in lots, you are entitled only when you receive the 100% of goods. Even if the 99% of goods received and 1% not received, you will be entitled to take the credit only when the last lot is received. That is another stringent. You have to always continuously monitor whether you are making the payment within 180 days. If it is not done, then also you are not entitled for the credit. If by mistake you avail the depreciation on a capital asset, then you should not avail the credit on that portion. You should not avail. Whether it is availed within the time permitted under section 4, that also you have to monitor. See, this is not the, this is only a it goes on, it keeps on going. And I just tried whether it will be able for me to make a completely comprehensive. I think that is very difficult because so many conditions are to be fulfilled cumulatively to avail the credit. Why those kind of restrictions are there, that we have to elaborate. Goods or services not used other than business. If it is used other than business purposes, then gone. There is no credit. Similarly, another rule says that if it is partly for taxable and partly for exempted supplies, then only on the portion on which it is taxable, then only you are eligible. And similarly, banking officials, they are entitled only for 50%. You have to ensure that you avail only 50%. Any credit, whether it is insurance, repairs, servicing, all those expenses which are pertaining to a motor vehicle or vessel, aircraft and all, it is not eligible in the normal course. It is eligible only when that same is used by the person who is in the same line of business. Any expenditure which is incurred towards food, health care, tour, etc., meant and it's ultimately consumed by the personal consumption, then also credit is not available. So far as work contract service is concerned, only when the output supply is also work contract, then only it is, otherwise it is not eligible. Construction, when used in further of business, then only it's eligible, otherwise it is not eligible. I mean, the same business, the service products, the same business of construction, then it's eligible. If tax is paid in a composition scheme, then also credit is not available. If the recipient is non-resident, then it's not available. So they are keeping on giving so many restrictions. If it is a personal consumption, it's not available. If it is stolen or destroyed or gifted, then also credit is not available. See, these things are very, very important. Actually, we have to briefly touch upon section 73 as well as 74 because even though our main topic is input tax credit, it is partly related to that because any wrong availment or other things will attract section 73 as well as 74. We will see what exactly is 73 and 74 and what is 29 and 30. Now here, section 74 talks about an action of fraud or willful misstatement or misrepresentation, or like that. If there is, and ultimately it is for the department to prove that there is some malafide intention, but if it is there, then that, see, it is very, very critical and we should know it is a very, very stringent and most stringent condition. Even if it is the normal course, you feel we have so far discussed so many conditions. It should fulfill the basic definition. We have to make all the conditions mentioned section 16 to, we have to ensure that it is not hit by section 17. it means it is already passed some 15, 20 tests. After passing all the 20 tests, suppose this is happening after some proceedings of the department, which is under section 74. That we will have little more elaborate discussion subsequently. And 129, it is detention of goods. We have just saw that there was some wrongful detention due to quantity mentioned in number as against kg, even though there is no legal requirement, it's mentioned kg. Even if it is detained, then your credit is gone. You are not entitled, it cannot be cured. And 130, it is seizure of goods. Suppose goods are wrongly detained and you don't convince them, and due to your the proving of the department that is fraudulent intent only, then it is seized, means then credit is completely gone. So we have to strictly ensure that we are not hit by any of these things. Then only the credit is available. Otherwise, it is not available. Section 74, section 73 we will see first. Section 74 we will go subsequently. See, in the assessing authorities, adjudicating authorities, they are having two periods. One is normal, another is extended. Actually, the government originally during service tax regime, it was kept at 12 months when the tax was introduced in 1994 for the first time in India. At the time, as per the applicable rules, show cause notice can be issued only for a maximum period of 12 months under the normal period. Subsequently, it was enhanced to 18 months. Subsequently, it was enhanced to 2 years, and ultimately from 1st July 2017, the normal period is kept as 3 years. The 3 years limit starts only from the due date for filing return. Let us see with a practical example. GST was introduced from 1st July 2017. For the year ended 31st March 2018, as per the provisions prevalent at that time, we should have filed the return by October 2018. Now, from that date, they have got 3 years. It means up to October 21, they can issue the show cause notice. Actually, the 3 years limit is applicable for passing the order. They have to issue the show cause notice just minimum 3 months prior to the date. October 21 means by July they have to issue the show cause notice. That is normal period. So if any show cause notice issued under normal period, then it is slightly safe. There are so many positive aspects under that. Like, even before issuing the show cause notice, they will inform you that we have got this much, ascertain that this much is payable by you, whether you agree. Suppose we find it as fault of our side and we willing to pay, means then we are very safe. Even before the issue of show cause notice, if you pay applicable taxes along with applicable interest, then you are very safe. Show cause notice will not be issued. And suppose show cause notice already issued, then also you have got 30 days time. You go through the show cause notice and you find that definitely it is not a fit case for fighting, and you decide to make payment. Then also, if you make payment of applicable taxes along with interest up to the date of payment of the taxes, even though show cause notice is issued, there will not be any penalty and all. So those kind of provisions are available in section 73. But section 74 is a very harsh provision. Just I will go through for the understanding, where it appears to the proper officer that the tax has not been paid or short paid or erroneously funded, or where input, I am talking about input is credit wrongly availed, or it is by reason of, see, it should be either fraud or willful misstatement or suppression of facts to avoid tax. And this is to be proved by the department. You can always take a claim, but they will try to take a stand that we go suppress some fact that we will discuss elaborately. If this is the case, then he is having time up to 5 years for issuing the show cause notice, for passing the order, and 6 months, it means 4.5 years for issuing the show cause notice. If these kind of situations we are hit, then it is very dangerous. This I think we have already covered this only for academic interest. If it is partly for business and partly for non-business, we should avail credit only pro rata, which is pertaining to the business. Similarly, partly for taxable service and partly for non-taxable, then only to the proportion it is pertaining to taxable, we are entitled for the credit. Actually, among all the provisions, this job work, it is relatively very simple provision, and there is no further amendment from the date of introduction. If any inputs is sent or capital goods is sent to the job worker, there are two situations. It can be brought to the principal place or it can go directly to the thing. In both the cases, you are entitled for the credit. The only requirement is that if it is for job worker, from the date of invoice, within 1 year, it should be brought back to the principal place after completion of job work. Then only you are entitled for the credit. Otherwise, you have to reverse it along with applicable interest. So anybody who is under job work, they have to closely monitor, and as and when the time passes 9 months, one should alert and try to bring back the goods, because 18% per annum interest, it is too much on the high side, and there is not received by them. Similarly, if it is for some capital goods, then you have got a slightly higher thing. If it is not coming, then ITC reverse is required along with the interest. Input service distributor, I think it is a well settled concept. It is applicable from the service tax period itself. It is only applicable for services. It is not for goods, and it is voluntary. But anybody will be normally interested to avail the credit fully. There also they put one restriction that suppose one company is having operations across India, so many states, having some 10-15 units or offices. If any credit is pertaining exclusively for one unit, then it should be credit distributed only to that unit. If it is more than one unit but not for all, then on pro rata basis only to the applicable units. If it is applicable for all the units, then it has to be distributed to all the units. So at the time of distribution, you should take care of this aspect, and it can be based on full credit means there is no issue. If it is pro rata for few units means it will be based on the turnover. And if by any chance, if more amount is distributed, then it will create trouble. You have to, it will be recovered along with interest from you. So we have to ensure that only applicable credit is distributed. See, normally what happens, the department people come for audit and they cover the specific period from such and such date to such and such date, and issue a report also that during this the premises were audited during this period, and the following observations are made like that. They give a order also. Under these circumstances, let us assume that one of the assessee's premises is already audited for the period from 1st July up to 31st March 2019. It's only an assumption. Now, they come to the office, they do the audit, and they find what is happening in our operations, and they go through all the documents, all the things. If that is the case, in 2020, if they come again for audit, they cannot make an observation which is not observed in the past. Whatever observations they have observed in the past, that they have already covered for that period. They, when they come in 2020, they should not say that no, Asika suppressed the fact during 17-18. I was not aware. That is why I am going for extended period. It is not permissible. Courts will not listen to that argument. And similarly, if we are transparent and the department is already within the knowledge of whatever is happening, what practices we are following, then also they will not be able to charge that there is suppression of fact. Unless otherwise, either fraud or willful misstatement or suppression of facts proved, then section 74 cannot be invoked. So this is one aspect. I have received a few questions. I think I will try to address whatever is possible, and if it's there, then I will try to give separately. What goes? My question is on utilization of input tax credit. Actually, I am not able to understand what exactly is the question. Can it be elaborated? Oh no,
Next one is following up with the same questions.
I'm sorry. Due to some financial commitment, I am not able to file GST return for 8 months from August 20 to March 21, and my GST is cancelled. Later, I filed the return in November 20 for August 20 by availing available input as per 2A2B, but the demand issued showcase notice that input claimed after 6 months and liable for reversal. Whether this input of August 2020 to March 2021 is available or not, because the input is related to that particular month only. I think it will be very difficult because just now we have discussed the conditions, how stringent they are. Now, at least at the time, there were no such requirement, and return filing was permitted bilaterally. Now, unless you file the previous month return, you may not be able to file the next month return also. So the basic and fundamental problem with the indirect taxes is that it is all procedure oriented. Unless otherwise we strictly follow the procedure, it will be very, very difficult to take advantage of the situation. Let me just go through again. Actually, showcase notice was issued that input claimed after 6 months. And I have to go through the relevant provisions because, as per my understanding, the restrictions are contained up to that. We have got a time limit for availing the credit up to earlier October, now November. So we have claimed within that only, unless otherwise I go through showcase notice and what exactly is the ground on which they are rejecting, I may not be able to answer. I think you can, at the end, I will give my email as well as mobile number. You can always send me, I will be able to go through the facts of the case and suggest. That should not be a problem. Okay. See, actually, since we have got a little more time, let me share my experience with this departmental officials. See, actually, we should be thoroughly knowledgeable and know all the provisions so that we are able to tackle. So I quoted 3 examples where the high courts have come down heavily and the film organizations are creating unnecessary trouble. So they will be always like that only, because their controlling officers are monitoring them for collection. They have to improve the collection. There are other requirements for them. One practical example I will give. What exactly has happened? When I was working in a company, that time, first time input service distributor concept was introduced. So we came to know that the facility is there. We have immediately started taking advantage of the situation. And after 3 months or 4 months, one requirement has come that input service distributor has to register himself. So we have immediately applied for registration and we got the registration also. Now, one fine morning, one superintendent or some officer came to our premises and they just gone through the papers. Immediately they pointed out that no, the period before registration you are not entitled for the credit. You have to reverse the entire credit which was availed prior to the date of registration. Then how it is possible? Then we are going through. Then we came to know that at the time there was no requirement for registration. The registration came, and within the time limit we got the registration. Then there is whatever he was making that point, it was observed. So once this fact was brought to their notice, then they were lenient and they did not raise. So like that, if you are thoroughly knowledgeable and counter them, then it will be manageable. And another example is also there that actually during the period from 2020 to 2022 March because of the pandemic situation prevalent in our country from 1st March, I think, Supreme Court voluntarily came out and gave a clarification that in all limitation cases, this period will be excluded from for the purpose of competition or limitation. It means, suppose the exclusion is from 1st March 2020 to 31st March 2022. Then, if as on 1st March 2020, when the limitation exclusion came, you get some unexpected portion of 15 days that will start from 1st April of 2022 only. That way, it was beneficial only. And for all other new cases, which start from the during that period of 2020, you will have full period. Suppose limitation is 6 days and it starts during that period, means from the expiry of April 22, you will have full period. This is the normal understanding. Now, one show cause notice came. I was squarely hit under this, and I was having some time limit till next month. So I just to be on cautious spoke to the concerned assessing officer and told them that this I am taking advice. They immediately told, no, this is not applicable for your case. This benefit is given only for the department, like that they are. Actually, that is not a correct argument, because while the limitation extension is there, they are not referring to assessee or department. It is pandemic is not only for department; it is for everybody. So let me just see. So that we answered, then they accepted. Mr. Mudhugos, you can just send me a mail. I will definitely reply after going through the fact. As tax practitioner, how has your experience been in dealing with authorities with respect to GST related issues? It is a very good question. Actually, the difficulties are not just one or two. There are hundreds of difficulties. So, see, basically, I have already told that this law, GST law, has evolved by combining so many other laws. Earlier, there were so many definitions, taxable event, separate definition, what is activity and all. Now everything is combined and it is a totally new situation. Now, the problems are more with the authorities at the state government. At state government, these officers, even after 5 years crossing, after introduction of this GST, they are not thorough with the GST provisions and all. They are very comfortable with the old provisions and they approach with the same mindset. If that same provision is applicable here, then they are correct only, that we have to tackle them. This issue is being addressed by our institute also. Our Indirect Taxes Committee is organizing a lot of sessions, knowledge sharing sessions for the department itself. We are conducting sessions for the department. Only thing is, actually the thing is, these people are very, very egoistic persons. Even though we know the law much better than them, we should not make that this thing. We have to be always very polite. We have to tell them that whatever understanding they are is not correct, because see, this is what the law says. This is the one and only interpretation which is possible, which I am taking. Here there is no violation, and accordingly it should be through. Like that only we have to handle the situation. I think my answer is clear to you. Next one. Mr. Ravendra. Sir, an assessee has remitted the output tax liability by making the payment in electronic cash ledger along with interest up to the day of payment due to delay. Okay. The liability pertains to August 2017, remitted in installments in October and December 17. However, the assessee showed the relevant turnover August 2017 only in return of July 18 and set up the liability against the payment already made. The officer is demanding interest for the period from August 2017 to July 2018 on the ground that the tax was actually paid in August 18. Is this position of the officer correct? And whether the assessee will have to pay the interest up to July 18. See, actually, I am not able to understand the question properly. We have discussed a lot on interest. See, actually, that section 50, subsection 1 explanation, it is very dangerous actually. But in cases covered under 73, 74, there will be some problems. But I think in this case, it is not covered under 73 or 74. Let me just read the question again. I think has remitted the output tax liability by taking payment in electronic cash ledger along with interest up to the date of payment due to delay. That's correct. The liability pertains to August 2017, remitted installment in October and December 17. See, whatever payment you have made up to October, on that interest is applicable only up to October, and whatever is left over after October and on that you are making December, that only will attract interest for that period of December. However, as she showed the relevant turnover of August 2017, only in the return of July 18. Okay, and set off the liability against the payment already made. No. I think the office is correct because August 2017 turnover is reflected in 2018 means then interest will be applicable from August 17 only, nah? Because it is linked to the turnover only. Only thing is there is a clarity that interest is payable on net cash basis only. So whatever amount that has been paid using electronic credit ledger, on that there is nothing to worry. Only the portion which has been paid by electronic cash ledger, on that interest is payable, but interest is payable for the period during which there was some delay. That is actually the problem is the provisions relating to interest is very harsh. You cannot avoid it. If tax is payable and tax is paid belatedly, then for the shortfall as well as period during which it was not paid, interest is payable. This is what my understanding. Now, since some more issues, something more I can cover, I just want to cover that. See, this CBIC has recently published on latest developments in GST in their site itself, cbic.gov.in. Whoever is interested, you can simply visit the site and download and read. There are some interesting developments. They are giving a lot of positive clarifications in the recent past. In July 2022, they have given some clarifications, out of which I was really impressed on two. One is that there is a practice to levy liquidated damages whenever there is some delay or some quality problems and all there in the supply of the goods. The department was the view that the GST is payable on that, but they have clarified that it is not required. And similarly, you spend some money under corporate social responsibility scheme and you spend some GST on that activity. The credit is definitely available. There is absolutely no problem, because what is happening, it is a legal requirement. You are not doing it voluntarily. You are doing it to comply with the provisions which are contained under the Companies Act. And it is a legal requirement. You are doing to run the business. Otherwise, you will have problem. That's so there cannot be any problem. That is first situation. Second situation, suppose you have to spend 10 lakhs rupees, but you can't monitor it, so you spend 11 lakh rupees. Then also the excess spent amount 1 lakh may involve another 18,000 tax. That also cannot be denied, because it is for the interest of the business only, in furtherance of the business only. So normally they will not say no, it is legally available. You may have difficulty at the initial stage, but courts will not, tribunals will not take a stand that it is not available. It will be available. Similarly, whatever is R&D activities, that also credit is available, because it is only for the purpose of the business. Now, one more clarification they have given July 2012 circular, that is also very interesting. They are saying that these big factories, they are engaging contract services for transport of workers, and they also provide canteen services. Earlier, the standard that was that no input tax credit was available on those activities and taxes payable. Department has very clearly clarified that If it is as per the legal requirement or contractual obligations, then such credits cannot be denied. Based on that clarification, we can always take advantage. There are certain negative aspects as well. That is, despite 5 years crossed from the date of introduction of that act, that appellate tribunal has not been set up. It is creating a lot of problem. See, the thing is, it is not so easy for each and every small assessee to approach the High Court. It is very, very expensive. We have to spend money in lakhs. And it is not that each and every writ is admitted simply. It is not the case. Many writs are admitted, registered even at the trial stage, initial stage itself, at the time of filing itself. We should have a very strong case. The alternate remedy should not be available. Only in those cases you will be permitted to go for it. It is not happening that way. That's one aspect. Similarly, if we seek refund, the department pays only 6% interest. That is also very difficult. Even getting refund itself is difficult, and getting interest is all the more difficult, but it is only 6%. Whereas any delay from our side, assessee side, it attracts 18%. Now, e-invoicing, let us see. Actually, as on date, it is already brought down to 10 crores, which is too small amount. For small assessees, it will be really hardship because it requires a lot of technical things like a computer programmer should be there. You should use JSON language, and you have to file it with the government site, and they have to give the QR code as well as invoice reference number and all. All those things are requirement. But what the government is arguing that once you are under e-invoice, actually the thing is, it becomes very easy for them to monitor the goods, and they want to avoid the bogus transactions and all. Because of that, they are bringing no limit, and there is a proposal to make it 5 crores. It may happen by 1st January 2023 or by 1st April 2023, but it is likely to happen. It happens, then it is further stringent measure for the small assessees. They are claiming that no, it is advantageous to the assessee because we take the inputs for GSTR1 as well as GSTR2B from the e-invoice, and ultimately your work is easy. You need not make any entries in those things. You can take automatically, like that they are. And the worst part of it is the stringent conditions they are imposing on input tax credit. Let us quickly recapitulate. One is that you have to fulfill so many conditions which are under section 16(2), and you have to ensure that whatever conditions which are specified in 17, that is also whatever restrictions that is not fitting in, and we are not covered by the restrictions. Even so here itself we pass so many tests, and even after passing all the tests, how many restrictions are there? You see, you have to make the payment to the supplier within 180 days. See, what is the intention here? The intention here is only to avoid the bogus transactions, nothing else. Because if goods are not moving, then how you make the payment? Then problem will be there. So it is not. In some cases, it will be the other way around. You will only get goods. You will not get the bill. That is cash transaction. That is also not that easy, because nowadays income tax rules are also very stringent. 48 to be restrictions, 20,000 and also. It is not that easy to violate anything. And I would like to caution the participants here that if anybody is having a turnover of more than 20 lakhs rupees, now this law, it is being administered by machines. It is administered mostly by machines. So the input is already with the department. Suppose for the year ending 31st March 22 or 31st March 23, you are in some business or service and your turnover is already crossed, before March it is crossing 20, then it is absolutely essential to take registration, because you might be done something in partly cash, something in bank, but all the transactions they are capturing through your PAN number, and everything is available to the department. So tomorrow there will be some issues. So we should be very careful in ensuring that the moment it is exceeding 20 lakhs, we are taking the registration. We are accurately making the payment. We are making the returns and all very correctly. All those things are there. Now that how that one decision is that payment should be made within 180 days. Other requirement is that if the supplier has not paid the applicable tax to the government, then you are not permitted to avail the credit. And for that the credit should not be a restricted one. For that they put 6 different conditions. That see actually that all the conditions are at the hands of the supplier only. Oh, I am a buyer. Only thing we can say is that we should go only to reputed sellers. We should not go to each and everybody. And a person which are well-established persons, because if a person is starting a new business, you should not go to him. Only those are all the precautions which we can take to avoid these kind of situations. Any other participants, if they are interested in raising any questions, you can raise, because we are still having another 10 minutes time.
Sir, are we done with questions, sir?
Yeah.
So is there any questions from audience? Those who raise and they can unmute and ask. If not, so we'll wind up the session.
Yeah, I think there are no further questions.
Okay, sir. If there is any further questions from audience, they can write a mail to you. As you said, you can share your mail ID in chat box or Q&A panel.
Yeah. Actually, I am sharing my mobile number as well as mail, and whomsoever is still, come across any issue, you can always. Unfortunately, this my mail ID and mobile number are not appearing here.
So you can put it in chat box. I'll put open.
Yeah.
You can open chat box and
Yeah. See, kind attention all the participants. I am really happy that you people have a very patient hearing throughout the session. And my background is that I am constantly updating all the developments happening in GST almost on a daily basis by going through that latest notifications, latest circulars, and whatever case laws comes daily basis. I am updating. So I am sharing my mobile number as well as email with you. Mobile number is 9891967094, available in WhatsApp also. And similarly, this email ID is balaamuda@gmail.com, BALAAMUTHA@gmail.com. So actually, it is not the case that I know something and I have shared those things with you. It is not the case. Out of the participants, somebody might be senior, somebody might be dealing aggressively in GST. For them, it will be very only for academic interest, but still, I wanted to share whatever I came to know during recent past with the participants so that it is beneficial to the thing. Any issues which relates to this particular topic, if you have any issues, you can always write me mail, you can always send me by WhatsApp. Based on further inputs, I will be definitely able to address the issue and help you to come out of the problem the department. That way we will be able to make. I thank everybody, and especially I thank the entire team, especially Silva and others for giving me the full support for conducting the session in a nice manner. Thank you all.
Thank you. Thank you so much for your time spent here on knowledge dissemination. We look forward to have you in future session physically and also virtually when time permits. Thank you so much for your time.